This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending December 11th, 2021. Our question this week is, what is a shakeout? The answer will be provided later in the video. This week the market ended higher. The Dow Jones Industrial Average increased 0.6% on Friday and was up 4.02% for the week. The S&P 500 increased 0.95% on Friday and was up 3.82% for the week. The Nasdaq increased 0.73% on Friday and was up 3.61% for the week. Looking at the week, we can see that there were 12 up finishes versus 3 down finishes for the major indexes. On Monday, Tuesday, Wednesday, and Friday, all the major indexes finished up. On Thursday, they all finished down. The new unemployment claims were 184,000 versus 211,000 expected. Job openings increased 4.1%. Bitcoin dropped below 50,000 over last weekend and continued to drop throughout the week. Oil rose more than 3% on Tuesday after rising 5% on Monday. U.S. Treasury yields were higher after the market rebounded from the previous week's decline, and inflation surged 6.8% in November, the fastest rate since 1982. New unemployment claims, job opening increases, Bitcoin dropping below 50,000, oil prices rising, the increase in Treasury yields, and inflation surging are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a shakeout? A shakeout is when many investors sell their stock holdings at the same time, and usually at a loss. Often it is caused by continuing decline in the stock's price. When a stock starts to drop precipitously due to uncertainty or bad news, many investors will try to get out of the market at the same time, causing the shakeout. Shakeouts are usually sharp, that is, the price of the stock declines quickly from recent highs. Investors who sell during the shakeout are said to have weak hands. They cannot bear the volatility of the stock. They run for the hills, so to speak. And when weak hands are gone, the stock often goes up again. Have you ever been shaken out of a stock? Do you have weak hands? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending December 11th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Royal Caribbean Group, ticker symbol RCL in the third column. It increased 13.09% for the week and was up 1.07% on Friday. RCL is a cruise line company with cruises worldwide. They offer a range of itineraries that call on approximately 1,000 destinations throughout the world. Royal Caribbean operate cruises under the Royal Caribbean International, Celebrity Cruises, Azamara Cruises, and Silver Sea Cruises brands. Looking at a summary of results, you can see that RCL has increased just over 1% year to date. I did not trade RCL this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 5.79% versus 25.91% up for SPY, a difference of 31.7%. The Southside is losing to SPY by almost 32%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit earlier this year just when the portfolio started investing heavily into Bitcoin, and it has dropped for the past month. It is now in a bear market. Hopefully, most of the weak hands have been shaken out. Did the Southside start investing just when the price of Bitcoin was too high? What do you think? The portfolio is 77.38% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 22.57% of the portfolio. Cash is almost non-existent. It is at 0.05%. The cash flow generated for this week was 0.33% of the portfolio account value. The account value changed by minus 9.31%. Meanwhile, the S&P 500 ETF SPY changed by 3.82%. I sold option contracts on one position this week. It was a call. The price ranged from $0 to $380.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. A list of questions is in the description section. Please like, share, and subscribe.